Hey there, future investors. Welcome back to Aventus Society. If you're new to the world of investing, you're in the right place. Today, we're going to break down 5 essential terms that every beginner investor should be familiar with. Don't worry, we'll keep things simple and easy to understand. Let's jump right in. Term 1, stocks. First on our list is stocks. A stock represents ownership in a company. Think of it as owning a piece of that company's pie. When you buy a stock, you become a shareholder, which means you have a stake in the company's success. If the company does well, the value of your stock can increase, and you might even receive a share of the company's profits, known as dividends. So, imagine you buy 10 shares of a company, valued at $50 per share. If the company's stock price goes up to $60 per share, your investment is now worth $600. Term 2, dividends. Next up, let's talk about dividends. Dividends are like rewards for being a loyal shareholder. When a company earns profits, it can choose to share some of those profits with its shareholders. It's a bit like getting a bonus for being part of the team. For example, if a company pays a $1 dividend per share, and you own 50 shares, you'd receive $50 in dividends. It's like a little extra income from your investments. Term 3, mutual funds. Moving on to mutual funds. Imagine you want to invest in many different companies without buying individual stocks. That's where mutual funds come in. They're like investment bundles that contain a mix of stocks, bonds, or other assets. It's like diversifying your investment by trying a variety of dishes at a buffet. So that means that if you invest $100 in a mutual fund, this fund might have shares of Apple, Microsoft, Nvidia, Uber Technologies, as well as any other publicly traded stock, and even some bonds. So, you're spreading your money across different investments. Term 4, market capitalization aka market cap. Let's talk about market capitalization, or market cap, for short. This term refers to the size of a company in the stock market. It's like categorizing companies based on their sizes: small, medium, or large. For example, company PQR might have a market cap of $1 billion, while company LMN's market cap is $50 million. Bigger companies usually have larger market caps. Term 5, bull and bear markets. Lastly, we have bull and bear markets. These terms describe the mood of the stock market. A bull market is like a charging bull. It's a time when stock prices are rising, and everyone's feeling positive about the market's future. This means that during a bull market, people are more willing to invest, and the overall economy is doing well. On the other hand, a bear market is like a hibernating bear. It's a period when stock prices are falling, and there's less optimism in the air. During a bear market, investors might become cautious, and economic conditions can be challenging. There you have it, beginner investors. These 5 terms are the building blocks of your investment journey. By understanding stocks, dividends, mutual funds, market capitalization, and the difference between bull and bear markets, you're equipped with essential knowledge to start navigating the exciting world of investing. If you found this video helpful, don't forget to give it a thumbs up and consider subscribing to Aventus Society for more insightful content on stocks, business, finance, and all things money related. Thanks for joining me today, and until next time, happy investing.